I think the end game is to securitize the entire asset class, securitize the asset class. And so when we say we're a treasury company, what we mean is we're the institutional bridge between a high energy, volatile crypto commodity, that thing we call Bitcoin, with 60 AR, 60 volatility. What that means is it's it's always going to be higher performance than the S&P index. It's always going to be more volatile than the S&P index. As it goes from a trillion to 250 trillion, as it merges, the S&P will adopt Bitcoin and their performance will drift toward it, and Bitcoin's performance will drift toward the S&P. But as long as we're sitting between conventional equity capital and this crypto capital, we can arbitrage the difference. And as long as we're sitting between, by the way, 60 ARR, 60 vol, and the bond market is 6 ARR, 6 vol, 5. So you have fixed income, which is 5. You have equity, which is 15, and the traditional market. You have this raw energy source, which is 60 in the crypto economy, which is 24/7, 365. No one can stop it. Chinese, Russians, Africans, South Americans, people can panic sell 10 billion of it on Saturday night through one of the 14,000th exchange in the world, or 1400. So you've got this raw thing, and then you've got this traditional market. And what we've said to our investors, and I think they're starting to understand now, is so we're going to strip the volatility, strip the performance, strip the risk off of the bottom of the capital structure, give you like a 6 to 12% investment grade instrument to invest in, a 12 to 24% high yield instrument to invest in, a convertible investment that gives you 75% of the upside to 100% of the upside, but 10% of the downside. And then when we strip those performances and those vols via those fixed income instruments, you're talking like, say you raise 100 billion in capital. Well, you're grabbing 60 to 65% of the economic boost for the equity, for the MSTR equity. So when I sell 100 billion of fixed income, I'm going to tax $60 billion of boost onto 40 billion of equity on the MSTR side. That's how we get to 2x Bitcoin or 2.5 or 3. And of course, the real magic of the story is the baseline is Bitcoin is raw commodity. You either buy that on Coinbase, or Bitcoin is wrapped. You buy IBIT from BlackRock. That's the baseline. But it turns out most of the world doesn't want that. I mean, a lot of the world wants high voltage. They want 10x leverage. Susquehanna wants 10x leverage. Millennium, Soros, they want to be up there in the stratosphere. And then some people want, the MSTX, MSTU, those two ETFs raised $4 billion in a matter of weeks, no marketing. They want 4x, 3x Bitcoin. MicroStrategy is 1.5 to 2x Bitcoin. So some people want to be up there above the baseline. Look, if you believe in Bitcoin and someone can give you 2x Bitcoin and they can do it with intelligent leverage or with a balance sheet you trust, why wouldn't you want 2 times whatever you wanted, right? And then there's another world of crypto curious people. They're just tired and bored. How do you feel about a portfolio of 187 diversified preferred stocks that give you 520 basis points? And it's like, okay, you own the 16th tranche of the 18,000th regional bank, and it's like QSIP 199742. There's no volatility. You can't pledge it as collateral. You can't borrow against it. So there's a world, $300 trillion of board money that's waiting to die, getting 2-3%. And then there's another 200 trillion of hot money. MicroStrategy is just going to sell all of those instruments up and down the chain while we ignore the baseline. And I'll just make this one point. Like when you're arbitraging this, you're asking the question, well, how fast is it appreciating? So Bitcoin is plus 60 And let's just say because it's plus 30 to 60 versus the US dollar, and my long-term forecast is 29% for 21 years. So we're plus 30 to 60. Then the next question is, how volatile is it versus the dollar? Bitcoin's 60 volatile, but you can imagine it's going to be plus 30 to 60 more volatile. Then you ask the question, how fast is the investment cycle? If I borrow a billion or raise a billion of equity and I invest it in a real estate project, it takes 5 years, 1,500 days. If I invest it in Bitcoin, it takes 1 day. I'm running the investment cycle 1,000 times faster. And then the last question is, how accretive is the capital raise? So if I'm selling it at 3 times net asset value, you're capturing a 66% spread. The convertible bonds are capturing an 80% spread. When you sell a convert at an 80% spread and you do $1 billion of it, it literally means that you captured 80%, $800 million of capital gain on the day you did it. And you capture all of the capital gain for your shareholders forever on the 800 million. And so when you're raising 800 million and then you're investing it at 60% ARR or 30%, right? The amount of accretion is screaming. So what are we going to do? Well, we're going to do this $42 billion and then rinse and repeat and double it and double it and double it and double it. And you're going to say like, well, where does it end? Well, I guess when we've taken 1% of the fixed income market, which is $3 trillion, and when we levered it up and we've got 10 billion, we bought 3 trillion of Bitcoin and we're trading at $10 trillion in market cap, we'll be growing 20% a year.
All right.
Like so that's the end game, right?
So here's my question to you. So, gold is an extraordinarily mature market, and I'm going to round up here. So gold right now is an 18 trillion market cap industry asset, whatever you want to call it. Bitcoin today is about 2 trillion. So that's 11%. Where should that ratio be? And then by giving us that ratio, we can back into a Bitcoin price.
Oh, look, Bitcoin's going to go to 10x gold easy. Just keep in mind, right? A public company, it's got to hold a commodity on its balance sheet because it can't hold securities. So you've either got a choice of a digital commodity called Bitcoin, which is 60% ARR. Gold is 7%. Real estate is 10%. Bonds are 4%. And everything less than 15% doesn't beat the cost of capital. So the S&P sets the hurdle. So gold fails as a treasury asset for everybody in the world. Bitcoin succeeds. I think you could, if you call Bitcoin digital gold, it's 10x gold. But I still think it undersells Bitcoin, right? Because Bitcoin is digital capital. It's not just replacing gold. It's going to replace real estate, the S&P index, and any capital asset held by an institution or a wealthy family. So right now, wealthy families and investors don't use bonds or gold as a capital asset. They would use the S&P index or stocks as a capital asset. But banks and regulated corporations, operating companies, aren't allowed to use securities as a capital asset. They're knocked down. They don't want to use gold. It's not liquid enough and fungible. It's not liquid enough. And so they use real estate, and you got a REIT or a real estate development company, but the real estate is, less than the S&P index and not volatile. If you give up the ARR and the volatility of the S&P, you're trading down. So that's not really a winner. And then you're stuck with bonds, and bonds are dead money, a liability. So yeah, I think I've said before, Bitcoin, it should reasonably become a multi-$100 trillion asset class, right? My forecast is 13 million a coin by 2045, base case, upside and downside. I just expect another way to say it is it's 60% ARR at 60 vol. It's going to track toward 20% ARR and 20 vol when S&P is 15 over 20 years. It'll just step down as it approaches that target. Okay. If government becomes communist or socialist, then they're going to take your property, I suppose. So it's an existential threat. But what I would say to them is the smart thing to do is think about money as bifurcated into currency and capital. And the US dollar is destined to be the world's reserve currency. And the smart thing to do is just normalize stable coins or digital currency and let banks and corporations issue US dollar stable coin like Tether. And then that market will go from 150 billion to 10 trillion. And the US dollar will become the medium of exchange in North Korea, South Korea, Cuba, China, Russia, Africa, South America, and probably most of Europe. Literally, if you want the dollar to become the world reserve currency and move between 8 billion people the speed of light on Android phones, it's easy to do. Just normalize a digital currency with a digital assets framework. You will have $10 trillion of demand for treasury bills to back it. And then I would say, acknowledge that the world capital network right now is real estate and equity. And if you talk to any billionaire, no one is bragging about holding all of their wealth in cash or bonds. It's real estate, it's equity.